All right, we're going to be starting over spring break. You guys are welcome to start, and I know that you guys will be enthusiastic about that, getting ahead on your work, so when you come back, you'll have this all done maybe, right? We can just kind of review it and then go on to the next sections. After spring break, by the way, I know there's not a lot because we'll have business description, and then we'll have your executive summary, putting the whole plan together, and then you guys are going to have to start prepping too, though, for your presentations, because that's what we'll do finals week. You guys will make a little presentation about your proposal. Okay. Anyhow, I'll start trying to say that. If you look in the content section, just real quickly, the management and organization part's the next part, and that's what we're going to do. I got to move this though. This doesn't belong here. This kind of belongs towards the end, or maybe I'll create a whole nother. Organizing the plan is just going to tell you how to put everything together at the end, the whole thing. But we've got other supporting documents and choosing an organizational form, and I do want to talk about at least choosing an organizational form today to give you an idea what you're going to be doing in that regard. We've talked about it a little bit at the start because I kind of at least discouraged just about everybody from choosing a Schedule C corporation, a C Corp, because C Corps are unused. I got to back off when I say this, but for our types of entities that we're looking at, C Corps are very unusual. In the state of Montana, and especially in our area, C Corps are very common for agricultural enterprises, farms and ranches, not service things, but farms and ranches in particular. C Corps are popular. There's a specific reason for that. It basically amounts to being able to write off living expenses as a farm expense. That's why C Corps are kind of popular, generally, at least as an operating entity. But in terms and for our purposes, C Corps would be very unusual, okay? And the reason for that, and this will be good quiz questions for Thursday, the reason for that is C Corps are often said to be double taxed. And what do I mean by double taxed? Well, C corporations themselves have to pay taxes, right? So they have to pay taxes, then they pay dividends, or eventually if you sell your stock, hopefully for an increased price. Well, that's a bit unusual in the last few weeks, but if you sell your stock for an increased price, you got a capital gains or you get dividends, and you're taxed on those as the shareholder. So we say that there's double taxation when it comes to C corporations, and for small entities, it makes no sense to have that double taxation. Although with with the recent tax change, maybe things have changed just a little bit there, because maybe it will shield some things. That gets into, we could teach class. They do teach classes on that, on just how to structure things to avoid paying taxes, which is almost always a good thing. Anyhow, here's the main organizational forms. You guys are going to have to write about the organizational form that you choose. That's going to be part of your management and organizational plan, or portion of the plan. And so that's kind of why I want to talk about this a little bit. Again, I discouraged most everybody from going with the C Corp. But these are ones that you could choose, and we'll talk a little bit about the pros and cons of each. So hopefully I'll give you enough background that you can kind of, fill me in, I guess, as to why you're going to tell me why you chose maybe a particular type of entity. So sole proprietorship's the easiest, right? You don't have to do anything. Okay, you put out your shingle, you start selling things or providing services, getting paid for it, and you got expenses. You have a sole proprietorship. Okay, you don't have to register with the state, you don't have to register with the IRS, you don't have to do anything but that, right? At the end of the year, you're going to file a Schedule C tax return for your profits and losses of a business entity, but that's it. Okay. Owner has unlimited personal liability, though, for each of the business's debts, and that's why a lot of people like to get away from sole proprietorships. Okay, when you're a poor college student that gets done with college, and you got $20,000 in student loans, and your only asset's a 1996 Honda Accord, okay, it probably doesn't matter, right? You're not too worried about getting sued. What are they going to take your 1996 Honda Accord, right? Okay, so a lot of new businesses will start out as sole proprietorships because we're not terribly concerned about the limits to liability. As you get older and you've paid down your student loan and you've accumulated some more assets potentially, or you may have those at this point in your life, I don't know, okay, you may want to protect those personal assets, and you do that maybe through some other entities that we'll talk about, okay. You can also do that through insurance, right? You get liability insurance, and you're going to have liability insurance for the business probably anyhow, and you get liability insurance that covers your assets, right? If you got enough liability insurance to cover your personal assets, that's fine, okay? There comes a point where that liability insurance gets to be more expensive maybe than what you want to pay, and so you separate personal assets from business assets, and that's when you get into some of the other entities, okay? Not a separate tax-paying entity. I'm going to say that every time until I get to C corporation. Okay, general partnerships, basically the same thing as sole proprietorship. Okay, no formal requirements. There is nothing in the state of Montana. There may be in other states, but in the state of Montana, there's nothing that requires any formal application, anything to form a partnership. If Seth and I decide to go out and start mowing lawns together, we have a partnership. Okay, boom. I've been partners with a guy for 20 years on some real estate that we own together, and we've never had a partnership agreement. Shame on me, I should know better actually, right? But it works, and so it's not too big of a deal. Everything else is the same as sole proprietorship though. You are responsible though, think about this, so as a general partnership, you're responsible for decisions that your partner may make, okay, within that partnership, and that could affect your personal assets as well. Again, if you're broke, who cares, right? But if you've got some personal assets that you want to have protected, you know, a general partnership, it can still be okay. Again, liability insurance is very common. You're going to have liability insurance to cover the assets of the business. You may want to have enough liability insurance to cover personal assets if you have any. Again, if that gets to be too expensive, that liability insurance, then you may want to look at other entities. So, okay. Again, not a separate tax-paying entity. What's that mean? That means that all the income and expenses of the partnership flow through to the partners, right? So the partnership does file an informational tax return. They do a profit and loss, basically. And they come down, and let's say it's an equal partnership, 50-50, and the partnership made $50,000. Partner A gets a K1, it's called, that says they got a $25,000 business income, and Partner B gets a K1 that says they got $25,000 in business income. Boom. They record that then on their personal tax returns. Okay. The partnership itself does not pay any taxes, income taxes, property taxes, all those things, yes. Okay. Limited partnership must have two or more owners. Here in this case, one partner is going to be at least one partner is going to be a general partner, and the other partners will have limited liability. You might do this if Uncle Bob, you know, and Uncle Bob's got a lot of money, but he's willing to invest in your business, but he certainly doesn't want to be liable for, you know, things that could happen within the business, right? He doesn't want to have that liability hanging over his head. He'll give you 30 grand, great. He's part of the business. Maybe he's got a little equity stake in there, but he doesn't. You know, if you foul up and get sued, he doesn't want any part of that. Right? So we form a limited partnership. You running the business as the general partner still have unlimited liability. Uncle Bob does not. So Uncle Bob's he's a silent partner, the old silent partner thing that we kind of hear sometimes. He's not supposed to really be active in running the business. That's not to say that he can't have a little bit of input, but not supposed to be active at all in running the business, right? Uncle Bob or Aunt Sally, I should say. I don't want to be sexist here. Okay. These are, you know, these used to be more common than they are today, and I'll kind of tell you why actually in a little bit. Corporations. Again, we're going to break corporations down into two types of corporations. So okay, C corporations, let me talk about first. Let's just talk about corporations in general. Corporations have stock. They issue stock, right? That gives you, if there's 100 shares outstanding and you got 10 shares, you own 10% of the corporation, right? And that can happen. That happens in most of the companies that we see, that we talk about, big companies, Amazon, Microsoft, Apple, all those, they're all C corporations, right? Okay. They do that for a lot of reasons. Mainly it's so that they can raise money initially. They're C corporations. Okay. their liability, if I own stock in Microsoft and Microsoft gets sued, do I personally have to worry about having to pay some of that liability? No, the value of my stock may suffer, okay, but they're not going to come after me, right? Okay, and that's the same with any corporation. Even if there was a one owner corporation, and it only requires one, you don't have to have multiple people to form a corporation. Just one person can form a corporation, okay? And those people that own stock in corporations, their personal liability is limited. The reason we call it limited is because it is limited to your investment in the corporation. You stand to lose your investment, always. Okay, when you make an investment in a corporation or any of these other entities that I'm talking about, you always stand to lose that investment. Okay, that happens. The business goes upside down. It gets lawsuit for some liability reason, tort, whatever. Okay. Corporations are subject to, it says this, lots of formal statutory rules, officers, meetings. You got to meet once a year at least. You got to have recordings of the meetings, written recordings of the meetings, minutes. You gotta file with the state. All kinds of things that happen with C corporations or corporations in general. For that reason, a lot of folks don't go with corporations. C corporation, here's the difference. A C corporation is a separate tax-paying entity which does pay taxes, right? Okay, so they pay taxes at the corporate rate, which is 20%, I believe, now 21%. And they also pay state income taxes. In the state of Montana and other states that have corporate income taxes, they do pay income taxes there, okay? Then, if they pay dividends or something, then the owners have to pay taxes as well. That's why we say they're double taxed, right? Okay, separate tax return, completely separate tax return. It does not flow through, that part doesn't flow through to the owners, okay? But an S corporation, and these used to be quite popular, okay? This is merely a federal tax. You kind of check a box basically and say, I want to be taxed as a partnership as opposed to as a C corporation, meaning that you can have a corporation where the profits and losses flow through, just like a partnership, just like a limited partnership or an LLC that we're going to talk about, flows through to the owners, okay, and is not taxed on its own, okay. For that reason, S corporations used to be fairly popular. There are a restricted number of owners. I've read some places 150. I've read other places 300. Maybe that varies from state to state. I can't tell you. Okay. Why aren't they popular anymore? Let me move on. And this is kind of why. LLCs have really kind of come into vogue here. Even back when I was in banking, it was kind of unusual to see an LLC. So they're that new. By that new, you guys have always known LLCs, right? They've been around for 20, 30. They've been around for 30 or 40 years. When I set one up for some things I managed, some apartments that I managed one time, the lawyer, I said, I'd like to do that. He says, well, and this is 25 years ago probably, but he said, it hasn't fully been tested yet in the courts. So he was a little reluctant. When I first asked him about it, a year or two later, we talked about it again, and he said, no, it's been tested in the courts, and everything's come out fine. I think we're good to go, and so we set up an LLC. So when I say relatively new, it's certainly in my lifetime, and it's been around longer than you guys, but it wasn't popular for a long time because it was untested in the courts. Okay, you can have one or many owners. There's no limits. Okay, they're called members, so Okay, if you have an LLC referred to in your paper, you would refer to other people that may be investors, equity investors, as members. Okay, they're members of the LLC. I know that's semantics and all that, but that's just kind of, it's semantics that's important to people that are reading it. Bankers and lawyers and those people, when they're reading those kinds of things, they see certain terminologies and they go, oh, okay, they're talking about an LLC because they're referring to them as members. So anyhow, all of the owners have limited liability. That's just a huge concept again, right? Okay, that's when I set up the LLC that I wanted to set up. I had asked my insurance agent, I said, what would it cost for an additional $1 million of liability coverage? This, by the way, is one I was managing. I didn't have any ownership interest in it whatsoever. And it was going to be $4,000 per $1 million of extra liability coverage. And some of the owners of this particular company, they had net worths that probably exceeded that, maybe substantially, and so it was going to cost me an awful lot to protect their interests, right? To properly protect their interests. I may have had to buy another $3 or $4 million, right, in liability coverage. I called the lawyer and said, "What's it going to take to set up an LLC?" He goes, "Well, $1,500 to $2,000, and that's a one-time cost. The liability insurance would have been every stinking year, right?" So that was kind of a no-brainer. Okay, the LLC costs $25, I think it is, a year. You got to file a simple form with the state that says, yeah, we're still an LLC, right? And $20 or $25, I can't remember. So that was pretty simple. Way less costly than a corporation to create. Probably similar in cost to create, but the maintain part for sure. LLC, corporation, you might meet with your lawyer and take the minutes and do all the stuff and do it properly, right? LLC, I had it down. I could get on the computer this time of year, it usually was, and it took me about 15 minutes, poke a few buttons at the Secretary of State's, re-register, charge the account for $15 or $20 or whatever it was, done. Okay, that's all it took. So, didn't have to have a meeting, didn't have to do any of those things. So, it was kind of nice. Again, not a separate tax-paying entity. Okay, so all the profits and losses flow through. It's not double taxed. They flow through to the owners. So if you had three members, in your LLC that had equal shares, they do not have to be equal shares, but if you had 3 members that had equal shares, and the company made $60,000, then it's still a K1. You'd get a K1 for $20,000. You'd get a K1 for $20,000, and Randy'd get a K1 for $20,000. Okay, boom. It's kind of that simple. You put that on your personal income tax returns, line 12 or something. It says right in there, profits or loss from business, Can't remember which line it is. We have to look that up and see. Okay, LLCs have become very, very popular. Okay, very, very popular. If I'm going to come around, you're going to ask me what kind of entity you ought to pick. For a lot of you, I'm probably just going to say, well, again, if you don't have a lot of assets, just go sole proprietorship, because that's easier even than an LLC, because you don't have to do anything, right? But a lot of you, if you're concerned a little bit about the liability, or even in the future worried about that, forming an LLC makes probably the most sense. Would be, in general, probably what I would say. It says in many states, the business interests of the owners of an LLC are protected from the claims of the owner's personal credits. That's kind of interesting. It's a little bit backwards, saying that if somebody sued me personally, the LLC's, my interest in that LLC may be protected. Okay, that would be unusual. If somebody sued me personally, the stock that I own in Amazon would be, they might get it, right? It's not protected. They might end up with the stock that I have in Amazon. It's certainly not protected, but they're saying an LLC might enjoy some protections. But okay, that's I don't think that's the case in Montana. So just in some states, LLPs and there are professional LLPs and family LLPs, FLLPs and PLLPs. Not real common. Again, they're set up mainly for those two things. I'm not going to spend a lot of time because I don't think any of you guys would choose these. They've got different rules about limits of liability, and I'm not as familiar with this one as I am with the others because, again, it's primarily, I see lawyers' firms, Bosco Dugdale is set up as a PLLP. A lot of them are set up, accounting firms, some of those are set up like that, but a lot of other businesses typically don't go that route. So there we go. I've taken up plenty of time. On Thursday, though, I'll have a bit of a conversation about all the documentation that you're going to need to get. Just in general, again, I kind of talked about this. You'll end up writing a narrative for the management and organization part, and in that, and I'll talk more about that on Thursday too, you're going to tell me a lot about the day-to-day operations. You're going to tell me why you chose a certain type of entity, what hours you're going to be open, when your employees are going to be working, what shifts you're going to be working, who's going to manage the company. You're going to have your resumes in there and tell me why you are fit for that type of a company, okay, and several other things that are going to be in there. So it's kind of an accumulation of documents and then really just an explanation of those documents, a good full detailed explanation of those documents as it relates to you and the type of business that you've chosen. Okay, questions? Marketing is due, what, Friday or Thursday? Can't remember which day. It's either this Thursday or Friday, so take a look. It's Thursday, okay? So get those in. I'm not going to promise you that my turnaround time on those is very quick. It takes me quite a while to go through those. I will try to get those turned around as fast as I can. They generally become kind of a priority for me when you guys get them in there, but they're time consuming, you know, because there's 20 or 30 pages for a lot of people, and so it takes a while. And I end up correcting too much grammar and spelling in those things, which are all important. So, okay, I'll quit.